Hey everyone, today we are going to talk about two interesting companies that are quietly making big moves in their industries. The first one is India's top power tiller making, which just clocked its highest ever Q1 revenue, up 48% year on year on record tiller sales and a richer product mix that doubled margins. And the second company is Liquor Major, which delivered its best ever EBITDA as revenues up 31% and profits soared 121% year on year. Both are riding record quarters, one fueling farm mechanization and other is premiumizing India's liquor shelves. So, welcome to the another edition of Noisemaker, where we keep things simple and talk about companies that may not always be in the spotlight but have strong potential for the future. I'm Deepali, Equity Research Analyst at Desvelado Advisory, and today we are going to talk about two interesting companies that are making solid progress in their business, but if current trends continue, they might keep growing even further. So, before we begin, here's a quick disclaimer. Any discussion, facts, or writing provided are for informational purpose only and do not constitute a buy-sell recommendation. Please conduct your own due diligence before making any investment decision. So let's move to the first company. So first company is VST Tillers Tractors Ltd, founded in 1967 by the VST Group in a JV with Mitsubishi Heavy Industries. Today, it's India's largest power tiller maker with the VST family holding 51% equity. In Q1 FY26, they posted their highest ever Q1 revenue at 282.5 crore, up 48% year on year, driven by record power tiller sales of 11,701 units. A 92% jump supported by a good monsoon. Power weeder sales rose 63%. Domestic tractor sales grew 5%, but tractor exports fell 20% due to geopolitical and logistic issues. A better product mix, higher plant utilization, and a 22% sequential increase in distribution lifted operational EBITDA to 37.5 crore, with margins improving to 13.3% from 7% last year. The launch of the fuel-efficient, high-torque Phantom tractor series has strengthened their domestic range. So, Mudit will be joining for more. So, Mudit, with early July series data showing momentum holding up, management sees full year operational EBITDA margins between 11% to 13%. Do you think their combination of new product launches and higher tiller capacity will help offset export headwinds?
It's quite possible, Deepali. They already have capacity to scale tiller production to 1 lakh units, and their expansion into new regions plus higher horsepower tractors under the VST Zetor brands gives them more levers for growth. Looking at FY25, the revenue grew 2.7% year on year to 994.5 crores, with Q4 FY25 hitting the highest ever quarterly revenue at 301.4 crores, up 37.6% sequentially. EBITDA was 111 crores versus 124.1 crores in FY24. Margins eased up to 11.2% from 12.8%, and net profit came in at 70 crores versus 75 crores, with the net margins at 7%, showing softer profitability despite a stable top line. Nepali, given this profitability trend, do you think the domestic growth push can improve margins back to the historical levels?
That could happen, Mudit, especially with their domestic production strategy. In FY25, this sold around 8,000 bidders and expect double-digit growth in the coming years. They are launching new 5 HP and 8 HP models and aim to shift to 100% domestic production in 2 years, reducing reliance on imports from China, improving working capital, and expanding their potential customer base. Plus, their upcoming score machine, positioned between a high-end tiller and a small tractor, targets farmers wanting a multi-purpose, lower-cost alternative. Since it can be made on existing lines with extra capex, it could create a new market early and add an extra revenue stream. So, Mudit, do you see this core segment becoming a meaningful contributor in the medium term?
Dipali, it has potential. Like if the adoption picks up, the score could not only open up a new customer segment but also improve asset utilization and boost margins without heavy investments. If I were to sum up, then VST Tillers Tractor is delivering record Q1 sales and revenue growth on the back of the strong monsoon demand. leveraging new launches like Phantom tractors and the upcoming Score machine, building capacity for 1 lakh tillers while pushing 100% domestic production, targeting higher horsepower tractors under the VST brand, and positioned to balance export challenges with domestic growth and product innovation. So, if execution stays on track, they can maintain growth momentum while gradually improving profitability.
Thank you, Mudit. So now let's move to the second company, Tilaknagar Industries Ltd, a leading Indian-made foreign liquor maker. In Q1 FY26, they posted consolidated net revenue of 409.1 crore, up 30.6% year-on-year, driven by a 26.5% jump in volumes and market share gains in key markets. EBITDA surged 88% year-on-year to 94.5 crore, while PAT jumped 120.8% to 88.5 crore. They ended the quarter with a net cash position of 163 crore. For FY26, management is guiding for high teens growth in both revenue and volumes, aided by market share gains, premiumization, and the acquisition of Pernod Ricard's Imperial Blue business, adding a whiskey portfolio and pushing annual sales beyond 34 million cases. They are also investing 59 crore to expand Prague distillery capacity from 6 lakh to 36 lakh cases annually, alongside launching a super premium whiskey in H1 FY26, targeted adjusted EBITDA margins 15 to 17% over the next 2 years. So, Mudit, do you think this combination of premiumization and capacity expansion can sustain the double-digit growth trajectory?
It certainly feels promising. Their FY25 numbers already showed the trend. The revenue up 7.3% year on year to 3,175 crores, with quarter 4 FY25 revenue at 881 crores, up 9.4% sequentially. EBITDA rose to 225 crores from 185 crores, with margins improving to 17.8% from 13.3%. Net profit jumped to 230 crores versus 138 crores, with net margins expanding to 7.2%, indicating strong profitability alongside steady top line growth. With that kind of earnings momentum, Deepali, do you see them pushing margins toward the upper end of their 17% target faster than they planned?
Uh, that's possible, Mudit, especially since they're operating from a net cash position and aiming to keep net debt to EBITDA below 1x by FY29. This financial flexibility gives them room to expand capacity and the portfolio while keeping cash flow sustainable over the next 3 to 5 years. They're also building a broader premium and super premium portfolio across whiskey, brandy, gin, vodka, and rum. Recent moves include launching Monarch Legacy Brandy, updating Mansion House Whiskey, introducing a super premium whiskey, and raising their stake in Spaceman Spirits Lab. These initiatives target premium segments growth, margin improvement, and reduce reliance on mass market brands. So, Mudit, do you think their premium focus will help them become a top tier player in India's spirit market?
That's a really good question, Deepali. If execution matches the strategy, it could. Premiumization not only enhances brand equity but also widens margins and stabilizes volume. To sum up, the Tilaknagar Industries is posting strong double-digit revenue, volume, and profit growth in Q1 FY26, scaling up with Imperial Blue acquisitions and major capacity expansion at Prague Distillery, strengthening its premium and super premium portfolio across categories and maintaining a strong balance sheet with net cash and conservative leverage targets, and positioned to capture higher margin growth while reducing dependence on mass market offering. So, if they sustain this trajectory, they could emerge as one of the most profitable and premium focused liquor companies in the country.
So, thank you, Mudit. That really helped us understand the direction both these companies are moving in. All right, now let's take a quick look at how some of our previous picks have performed. First is Yatharth Hospital and Trauma Care Services. We picked this at 630.1 and it's now at rupees 731, giving a return of 16%. And the next is Quality Power Electrical Equipments Limited from 720. We picked at 720.8 to 792.4. That's a 9.9% gain. And the third is KDDL Ltd. It moved from 2,773 to 2,578.8, delivering a negative return of 7% decline. And the next is Carteret Tech. We picked this at 1,698 and it's now at 2,214, giving a return of 30.4%. And the last is GMM Fodler. This one also saw a rise from 1,271 to 1,311, which is a 3.1% rise. So overall a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape in the coming quarter. So here's a quick QR through which you can access all the companies that we have covered earlier in our Noisemaker segment. So now let's move to the summary. First company is VST Tillers Tractors Ltd. The company delivered the highest ever turnover for Q1 FY26 with a revenue of 48% year-on-year to 282.5 crore. Operational EBITDA more than doubled to 37.5 crore. And the next company is Tilaknagar Industries. The company reported a solid Q1 FY26 with consolidated net revenue to 409.1 crore, up 30.6% year-on-year. The company posted its highest ever quarterly EBITDA, up 88% year-on-year to 94.5 crore, while PAT surged 120.8 crore, 120.8% year-on-year to 88.5 crore. So that's it for today edition of Noisemaker. So that's it for today edition of Noisemaker. If you find this breakdown informative, you can scan the QR code to read the full report. We'll back soon with the more simple and clear market updates. Until then, stay curious, stay informed and stay ahead.